Today we're going to talk about this most recent crash that we've seen in Bitcoin as well as in other cryptocurrencies and how to remain calm during events like these so that you can control your losses, control your emotions, and control your life. And it really comes down to one lesson that I'm going to keep repeating on this channel every single time we have a crash in cryptocurrencies. I'm going to repeat this every single time. Trim your position size. That's all there is to it. If you feel emotional, if you feel out of control, if you feel like you have to stay glued to the charts, all that means is you have too much invested. Trust me, there's a magic number for everybody. I've seen it happen to every single type of trader. I've seen it happen to robotic types of traders. I've seen it happen to very intelligent traders. I've seen it happen to the guys who flip burgers. It doesn't matter who you are. No matter how much money you have, whether it's a small amount or a large amount, there is a number for everybody that makes them uncomfortable. Maybe your number is smaller than other people. There's no shame in that. I've seen situations where somebody will have $100,000 and it makes them feel uncomfortable to have $5,000 invested in a risky asset. I've seen the flip scenario as well, where there is somebody that feels completely comfortable investing $50,000 or half of their wealth into a risky asset. It's all about risk tolerance. It's all about how you feel when it comes to volatile events like this. And if you go through a roller coaster of emotions, there's nothing wrong with you as a person. There's just something wrong with your position size. Usually, that's the case in a lot of situations. Listen, just like anything else in life, there is different levels of risk tolerance for different people. And you need to be able to identify yours and identify it quickly when it comes to a market like this. Because I'm going to be honest with you, this market is really not investing. It's more like educated gambling. And even then, I would argue that it's probably just as close to gambling as anything else. Okay, because these don't trade off of fundamentals. It trades off of hype. It trades completely off of supply and demand. And we've seen situations where very small mistakes can lead to catastrophic, we can see tweets make a cryptocurrency sell off 20%, right? I'm not just talking about the Walton situation, which I think is justified to some extent. But also, if you look at the Neo situation, for example, we also saw a situation there where a series of tweets led to a massive sell-off. Now, I still think there are some massive problems with Neo, okay, but those tweets that were made were not exactly addressing those issues directly, and I'm not going to get into that too much. But the point is, this is a very sensitive market. And the more sensitive a market is and the less driven it is by fundamentals, the less it's investing and the more that it's gambling. So you need to understand your risk tolerance when it comes to gambling. Otherwise, you're going to end up being just that, a gambler. You're not going to end up being an investor. You're not going to be a trader. You're just going to be somebody that makes bets and usually ends up losing more than they should have lost. So let me explain that. Have you ever been in a trade before? And this should happen to every single person who's traded for longer than I want to say if you've traded for longer than 3 to 6 months, you've experienced this at some point. Have you ever been in a trade where it starts going against you a little bit and you start saying, okay, we're fine with that. We know that we're in it for the long game. It's eventually going to come back up to my target price and we'll be fine. And I'm fine with this little bit of loss. I can cut it loose whenever I want to. And then it goes down even more. And now you start getting a little bit worried. And now, instead of aiming for your target price, you start aiming for break even. And then it goes down even more. And I guarantee you this has happened to a few people in this particular crash here. It certainly has happened in this massive crash that we saw here. But let's go ahead and talk about it in this particular scenario. There's going to be people who bought in here or bought in here, and then it goes down lower. And they convince themselves, okay, it's going to come back up to this level. And then it goes down even lower. And so they get to the point where they feel so uncomfortable that they sell at the bottom, not because they think it's a smart decision. They know it's not a smart decision. But they make the decision anyway to sell it because they feel that they overexpose themselves. They feel that they just don't feel comfortable and they want to get rid of that feeling of uncomfort at any cost. So then they sell. And this is something that happens to people over and over again. So I'm going to keep stressing this lesson on this channel. I know I just spent most of this video talking about it, but limit your damn position sizes. That's all there is to it. Limit your position sizes. We'll say it over and over and over again every single time a crash happens so that you guys don't lose sleep over events like this one. Okay? Make sure that you do that. Let's go ahead and move on to what I did with this particular crash. So there's actually only one trade that I made, and that trade was with VeChain, believe it or not. And right now that trade is roughly break even, although it went fairly low for me here. So I bought VeChain at 39,000 Satoshi, practically flat. Okay, practically flat. And the reason I did that is because there's reasonable support at this level, but more importantly, there's a catalyst that's coming up here soon, which is this deadline for these X series nodes on March 20th. I don't know what's going to happen with this. Usually there is a sell-off following the particular deadline, like a massive sell-off. So what I'm planning on doing is I'm just going to hold VeChain up until next Friday, which will be March 16th, and I'm going to sell it at whatever price it is that day. It doesn't matter to me. So I don't care if I lose at that point. I don't care if I gain. I'm going to be selling it next week no matter what. That's my very short-term trade when it comes to VeChain. I just see this as one of the most hyped up coins in the space. It's trading near support right now, and we have a deadline that's coming up that encourages you to have more VeChain in a wallet. And as a result of that, I think there might come a point here where we see a little bit of a spike in demand. So what I have set up here is, first of all, I'm going to sell it next week no matter what. Okay, I'm going to sell it no matter what on March 16th. So it could be all the way down here. I will still sell it. Okay. The other thing I'm going to do is I have a trade set up so that I will sell 25% of the position at roughly 45,000 Satoshi. And the reason I'm doing that is I just want to have it set up so that if we have one of these little spikes here, I at least make it so that it's increased probability that I exit this trade with some level of profit. One of the things I've learned in this particular space, and really when it comes to any very volatile space that's exceptionally risky and doesn't trade based off of fundamentals, I've always learned that it's best to take profits rather than to get greedy and buy and hold. Now, they always say that buy and hold is the opposite of being greedy, but in a lot of cases here, when your coin goes up 10 times, 20 times, you should at least take enough profit to cover your initial position. Okay. Now this is obviously not doing that, because if it goes up to 45,000 Satoshi, that's only a 10% increase in Satoshi levels, but I'm still going to take some profit there. Again, this is a short-term trade, so I just want to make sure that I come out of it profitable, if at all possible. So got in on this one at 39,000 Satoshi. Should be interesting to see what happens. We also finally had a dip here in Manero. Some people have been asking me whether or not I bought in on this, and the answer is no. I still don't want to get into Manero at this point. You can actually see here that this was a fairly substantial dip, but it really only just makes up for the pump that we recently saw associated with the fork that's coming up. And personally, I think, just like most people, that this fork is not any good. And as a result of that, I'm hoping for a little bit of a sell-off after the fork. And I'm really, no matter what happens, I'm really looking to buy Manero below 2.5 million Satoshi. That's really kind of the price level I'm looking for. If we could see it come below this 2.5 million Satoshi level, I will start becoming a little bit more bullish on Manero. Although it's worth noting again that it is the largest position in my portfolio aside from Bitcoin. The only reason I bring up that I will turn bullish at this point is that's the point where I really want to start buying it. If it doesn't come down that low, then I will just continue to hold it and we'll do nothing from there. So that's my opinion, at least for now. And then lastly here, we have good old Cardano, the sob story here. I tweeted out to Charles to compensate me for my loss, but it doesn't look like he's going to do that, unfortunately. So looks like I'm currently taking a little bit of a loss here, unfortunately. I'm still going to hold on to this position. You just never know when things like this are going to recover, especially one that has as much excitement behind it as Cardano does. But really, I'm not going to be buying Cardano again until it comes down to, I don't know, roughly like There's some support down here in the lower 1,000 Satoshi area, so it would have to practically half in Satoshi level for me to increase my position in Cardano. And that's a fairly small position within my portfolio, but it still sucks to be down on it roughly 20% since I bought it only a few days ago. So it should be interesting to see what happens with this. Anyway, that's my overall opinion on the market. We're finally starting to see the Bitcoin dominance number start to fall a little bit here. I don't know if that's a bullish or a bearish sign for the market as a whole. Usually I've seen where if we see some capital move into the altcoins, that's usually a sign that people are a little bit more bullish on the market. Although it is worth noting, of course, that Litecoin had a pretty decent recovery here. Who knows how long that lasts. But just wanted to bring that up briefly because we came all the way up to I think 42.3% or so before finally coming back down a little bit. Should be interesting to follow what happens with this dominance figure. And then the other thing, there's one last thing. I keep forgetting all sorts of different details here that I wanted to bring up, which is Bitcoin is trading right next to this 200-day moving average. And so we haven't traded below that really since this crash back in February, which again, I still think that it's reasonable to assume that this did occur because of the Mt. Gox trustee selling off some of that Bitcoin. So it should be interesting to see whether or not we bounce off of this level. We've already come down below it. I think it should act as reasonable support, but I am not adding any more Bitcoin to my portfolio at this point. Again, I'm still fully allocated since I bought a bunch of Bitcoin at 8,300 back here. So just wanted to bring that up for anybody that's curious. As usual, I hope you guys enjoyed the video. Make sure that you check out my Steemit if you are interested in interacting with me. Otherwise, as usual, leave a like, comment, and subscription, and I will get back to you as soon as possible. Thank you for watching.